Greetings, fellow risk takers and value investors. Today on Stocks Telegraph, we're diving into the electrifying world of nuclear energy and a company at its core, Cameco Corporation. Now, CCJ's stock price has been on a bit of a roller coaster ride lately, with some investors spooked by the company's recent financial results. But here's the thing, the broader market seems to be overlooking a key detail: the strong positive outlook for uranium, the fuel that powers nuclear reactors. So, could CCJ stock be a high-risk, high-reward contrarian play waiting to explode? Let's grab our Geiger counters, figuratively speaking, and crack open the financial reports to see if CCJ is a hidden gem or a gamble gone wrong. Before we embark on this nuclear adventure, we want to hear from you. Are you bullish on uranium and its role in the future of clean energy? Or are you cautious about the potential risks associated with nuclear power? Leave a comment below and share your thoughts. Now, let's get down to the numbers and see if the financial data behind CCJ justifies a bullish contrarian perspective. In the next segment, we'll explore CCJ's recent financials and see if the underlying fundamentals paint a promising picture. First up, let's take a look at the current price. CCJ sits at $50.91. While some investors might be hesitant due to the recent dip, analysts seem to disagree. Their mean target price of $55.38 suggests a potential upside of over 8.8%, indicating their belief in CCJ's future potential. But there's more to the story than just the current price. Now, let's delve deeper into CCJ's financial performance. Over the last year, CCJ has delivered an impressive performance of 77.88%. This significant growth indicates a strong underlying trend, and the recent dip could be a temporary fluctuation rather than a sign of a reversal. Furthermore, the past week's performance of 5.16% demonstrates a positive short-term momentum. Now, let's get down to the nitty-gritty: earnings per share. This metric indicates a company's profitability. Here, CCJ shines brightly. Analysts estimate an EPS growth of a staggering 59.20% for this year and a phenomenal 81.97% growth for next year. These figures suggest that CCJ is poised for significant future earnings potential, making it an attractive option for investors seeking capital appreciation. The numbers speak for themselves. CCJ's financial performance is compelling. Strong analyst support, exceptional projected EPS growth, and impressive past performance paint a picture of a company with significant potential. In the last segment, we explored the impressive financial outlook of Cameco Corporation, a key player in the uranium sector. Strong analyst support, exceptional projected EPS growth, and impressive past performance paint a promising picture. However, a recent net loss and declining sales might raise some eyebrows. So, is CCJ a risky gamble, or a strategic contrarian play on the rising demand for uranium? Let's dig into the uranium market and see if the bullish sentiment holds water. Cameco's recent net loss of $7 million and declining sales compared to the previous year might seem concerning. However, it's crucial to consider the context. Management assures investors that these results align with their 2024 outlook, suggesting a strategic long-term approach rather than a cause for panic. Adding to the bullish sentiment, analyst Andrew Wong from RBC Capital Markets maintains an outperform rating on CCJ stock, with a price target of $70 per share, significantly higher than the current price and the median analyst target. This strong support from a respected analyst suggests that the recent dip might be a buying opportunity. In a recent development, the Senate passed a bill that would ban the import of Russian uranium. This news sent CCJ stock soaring, and for good reason. If signed by President Biden, this bill would significantly impact the global uranium market, potentially creating a scenario where CCJ emerges as a major beneficiary. The current geopolitical climate adds another layer of complexity. Russia controls a significant portion of the global uranium enrichment capacity. If tensions escalate and enriched uranium imports from Russia are banned, as some reports suggest, it could create a critical supply shortage. This potential disruption fuels bullish speculation for CCJ, as they could be well positioned to fill the supply gap. Let's break it down. Cameco, a Canadian uranium company with a presence in the US market, stands to gain from a restricted supply of Russian uranium. With Russia controlling a significant portion of global enrichment capacity, a ban would create a gap that CCJ could potentially fill, leading to increased demand for their services. This recent development adds fuel to the fire for the bullish case on CCJ. While short-term economic uncertainties remain, the potential for a uranium supply shortage and increased demand for CCJ's services paint a brighter picture for the company's long-term prospects. The recent price increase reflects this optimism, and the possibility of the Senate bill becoming law could further propel CCJ's stock price upwards. So, is Cameco Corporation a radioactive no-brainer, or a risky gamble? The answer depends on your risk tolerance and investment goals. The potential for a uranium supply shortage due to geopolitical tensions and the recent Senate bill banning Russian uranium imports present a compelling bullish case for CCJ in the long run. The impressive projected EPS growth and strong analyst support further solidify this perspective. However, don't let the excitement cloud your judgment. Carefully consider your risk tolerance and investment horizon. The short-term economic climate remains uncertain, and the recent price surge might indicate some short-term volatility. Conduct thorough due diligence, research alternative uranium companies, and weigh the potential rewards against the risks before making a decision. Ultimately, the decision to invest in CCJ rests with you. We've provided the information and analysis to help you navigate this complex market. Remember, responsible investing involves a measured approach. Let us know your thoughts in the comments below. Do you believe the potential benefits outweigh the risks for CCJ? What other factors are you considering when evaluating uranium companies? Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy hunting!